Dude, we're trying to get deals, trying to find deals. It's nonstop, just always looking to source deals every day, all day.
Where do you live in Brooklyn?
I'm in Park Slope.
Oh, nice.
Oh, wow.
Which is, it's good for the most part.
It's great. It's a good area.
It's beautiful. I love the architecture. I love the proximity to the park and the proximity to the city. So it's all in all pretty good.
We're doing a couple of condos and townhouses there.
Really?
We have one in Cobble Hill, I think, that we're doing.
Yeah,
Cobble
it's
Hill
Cobble
on Douglas Street. We have another
I didn't know that.
one. It's a townhouse. We're trying to sell for like $12 million.
You guys just renovated it?
We're in the process.
Starting.
How big is it?
It's like 6,500 square feet.
How wide is it?
25 elevator, 25 footer.
When did you buy that?
We didn't close yet. We're about to close now, but we're already on planes.
Cause man, when I was getting ready for this discussion, and we're rolling, so we'll just roll with it. But I mean, I guess just real quick to introduce you guys, we're here with JSAF Capital, Joseph Safdie and Jacob Kassin, and Luke Sproviero's here. This is Derek Bestrick. But when I was looking into this stuff, like I thought that I saw you guys were buying some townhouses because I saw a deal in Prospect Heights on Prospect Place, yeah. And I'm like, man, are they doing townhouses too? I'm like, what don't these guys do?
We love it.
Yeah.
We love the action. We love keeping busy. So 183 Prospect, we bought as a 3-unit condo conversion.
You paid a good number for that, though, no?
We paid like 2.6, 2.5,
Okay.
2.6.
I thought you paid like a full price, kind of it looked like on the surface.
Yeah, I think we paid 2.6. That was the price that we paid. It was one-off seller that was frankly very hard to deal with, but
To say
So
the
what's-
least.
I gotta show you the videos of
say
the
the
closing.
least.
It
What's
was-
the play there? It's a townhouse conversion?
so condo conversion?
Condo.
There's a comp on 189 Prospect that they made it a 2-unit, and they got about $7.5 million total sellout. We're targeting 3-unit. We're gonna have like a duplex on the first floor and the cellar. We're gonna extend the building back, and then we're gonna go on the upper floors. We'll do another duplex and then a floor through unit on the middle floor.
The parlor.
The parlor. So we're probably targeting
building
about
up?
$8.5 million sellout.
Vertical extension?
Just rear. No
Just rear,
vertical. It's
horizontal.
landmark. So we had to navigate through
Yeah.
landmark, which
It was a little bit of a challenge.
a little bit of a challenge.
Is this the first condo deal?
No, doing another one on Flushing Avenue with Chris. With Chris.
You're turning that thing into
Flushing.
condos?
We're turning that into condos.
How long have you owned that building for? It's been like 10 years, right?
It's been like 3-4 years.
That's it?
Stabilization was the issue there. So
We knew the seller. Remember the seller?
option was
Refresh me on this deal.
This is 888, right?
888.
I don't know if it's okay to throw down addresses. I don't even know how
sure.
that
We can
number
take that
sticks in my
out.
head.
But that was Isaac
that
Abrams'
was-
building, right?
that was
Steve Fishman owned it, I think.
Steve Fishman, Isaac
Steve
bought it.
Fishman sold it to Isaac,
Isaac,
yeah.
and then Isaac got out, right? Well, so you're condoing that.
So we're condoing that
8 units, or are you combining units?
8, just 8 right left. I can show you guys the renderings after. It's
Interesting.
It's really
What are you
nice.
projecting? I mean, I know the location. What are you projecting there for sellouts? Like price per foot?
Projecting like 800-900
Makes
a
sense.
foot. We're not really going crazy.
You know,
What's the price point on that?
It's probably $750 to $800 a unit. They're like 1-bedrooms that could be converted into 2s, legal ones because they air light. You can
Yeah.
only make them into 1s legally, but it's like a long living room, and then on the ground
That'll be a good
floor-
sellout though for that building.
Yeah, it should be a nice sellout. It's a good transition. The problem with that building was in 2003 it was supposedly sub-rehabbed, but nobody had records or documentation. So we spent 2.5 years through COVID, maybe even 3 years through COVID. We had one tenant that challenged, then another tenant that challenged, and then we vacated 5 other tenants, and 1 unit was vacant. We occupied it by our super, and we spent years litigating, and we actually prevailed, but there was no determination. It wasn't like you're determined to be free market. It was You know, like the judge said, listen, since it happened, we had a good judge. He said, since it happened in 2003, many, many years ago, I can't make a ruling on something where you're not proving or alleging any fraud, which very rarely you get a judge saying that. Usually they make sure you prove.
Yeah.
I've been to court several times, you know, so they want you to prove exactly if it was deregulated or if it wasn't. In this case, the judge told the tenant that if you don't take a settlement, then I will probably rule against you. That was like the exact conversation on this.
That's crazy.
And then a day prior, we offered that tenant $100,000. Our offer went from 100 to like 10. Paid him 10, and he took the money and he ended up leaving. You know,
Nice.
That was a crazy situation. But at the end of the day, you know, I think condos are the best route moving forward, just to eliminate any question marks. And you know, you make money, you move on.
What's the process like in terms of converting the building to condos with like, do you need like an offering plan, like attorney general?
So yeah, that's usually the reason why people don't like doing condos as much. In this case, we've owned the building, or Chris has owned the building for quite some time, and I'm coming in now into the deal. But basically, you know, condos take a year and a half to get AG approval with your offering plan. So it takes quite some time to get it approved, and there's a lot of detail that goes into it. You need to have specs of all your appliances, all your finishes, all your HVAC units, and you need to submit that to the AG, and the AG has to approve your offering plan, and then you got to subdivide your tax lots. So it's a process. You know, it's a process to get it done, and you know, ultimately you're selling the asset, which is not traditionally what we've done. We like to own long term. We like to own the assets. We like to hold on to them. But where the opportunity presents, or where the opportunity requires, we're doing the condo route, basically.
Did you file permits to renovate the units as well? Like you're doing renovations, or do you not need to file permits because you're just gonna like paint and cabinets and that kind of stuff?
So we're actually spending some money into it. We had some plans with like the cellar and the first floor. So we're like duplexing first floor and cellar, and we're excavating the backyard and the basement. So basically, when you walk out of the basement, you have a floor. You can literally walk out into the backyard.
Yep.
And you have full air and light, full windows. So now dead square footage, you know, 1,600 square feet that would otherwise be called dead square footage is now what someone else may call living space. Legally not living space, but someone else may call it living space.
Yeah.
You know, accessory to dwelling, however you'd like to call it. But you know, now we unlock a nice amount of value, and now those
100%.
units become like $1 million+ units.
Can you sell that accessory square footage at the same price per foot as like the first floor above, do you think?
Usually not.
Okay.
But in this case, if it's nice enough and your ceilings are 9 feet,
Yeah.
or 8.5 feet, which is what we're targeting, 8.5 to 9 finish,
Might be doable.
feels like a floor. So somebody might look at that and say, you know what, this is actually considered, like I would use this as living, you know, and I'll pay the premium for it. Maybe not the full VIG, but you'll pay like a percentage.
And these brokers are pushing that. I mean, a lot of the residential brokers, I see that they're advertising like duplex space, basement space.
It's hard not to.
I mean, especially if it has access to the backyard and full windows.
The issue I'm seeing with that stuff, and I wonder how you guys do this, is just the water. Because, like, I don't know. I mean, I guess the concern is it's going to flood, or that there's not good drainage in the lower level for the outer space. I don't know if you have thoughts about that, or like a sump pump type of situation.
Yeah, so in all our basements, fortunately or unfortunately, we've been experienced with basements, and we've had issues in the past, like apartment duplexes. What we do is we put a lot of dry wells outside in the rear yard. We put a pump, and we hook it up to the main line to basically, you know, cover all of that. We also do waterproofing. So, you know, most waterproofing, you know,
How many dry wells are you doing?
We're doing multiple. I
Really?
mean, we do like probably 3 or 4 dry wells.
I like that.
We do some other drains that connects to the pump as well, just in case it overloads and overflows. You just don't want to overload the pump. If the pump gets
That's a good
overloaded
thing
with too
for
much water.
the broker to know, to be able to tell a potential
dry well?
purchaser. a dry well is like just a hole in the ground that gets
Yeah.
covered up, but you take like a bag of rocks and you stick it in this hole, and you have like drainage going into it, and it basically distributes the water.
The water
like,
goes down into the soil pretty much, and instead of it going to the sewer, it goes just seeps all the way down into the soil, so it just absorbs.
Because
everything.
down at like say the lower level, right in the backyard.
Yeah.
The question is, how do you get the water from that lower level
Yeah.
into the sewer? Because the sewer pipe is likely higher than the ground floor on the basement level.
Yeah.
So dry well in that case makes a lot of sense, and then you can distribute the water naturally into the soil.
Makes sense.
I like that. Nice.
So generally, if you're looking at any construction site or any building, you have the sewer main that runs in the street, and usually the basement is below the sewer main. So shit got rolled downhill, not uphill. So in order to get the water and the sewage up, they have a pump that shoots the water up into the sewer lines and pushes it up back into the main of the street. Same thing with, electric and water is much easier because water can travel in different directions. You can run a water line downwards, upwards, sideways. The water just pushes through the pipes. Electric comes from the street, comes from the main, goes into the building, and then gets distributed and branched out to each of the units or each of the meters, each of the panel boxes. But that's why we need to put dry wells, because you're relying solely on a pump. If the pump goes bad, all of a sudden your basement gets flooded. If the pump just dies down, your basement will fully flood. So you got to mix it up with dry wells. You got to mix it up with pumps, and you got to mix it up with waterproofing as well. When you waterproof the facade, you got to waterproof properly. Not internally, externally, as well as internally. So meaning water can get in many different ways. So the more ways you block it, the better it is.
Yeah, makes sense.
So one of the things that I noticed when I was getting ready to speak with you guys today is, first of all, you're doing like so many different types of deals, but I think one of the things that really stuck out to me is all these deals you guys did in the Bronx, like all these conversions. First of all, you got letters of completion and final COs on everything, which is honestly kind of unique because a lot of people aren't getting letters of completion and aren't getting final COs. A lot of developers are like not getting the final stamp of approval for whatever reason. So I thought, and just hearing you talk about like the waterproofing in detail, like it's just interesting that you guys are really completing these projects fully. I also noticed in the Bronx that you guys, it looks like you guys cashed out and refinanced like every deal and owned those buildings for free. So I thought that was really cool to see.
Yeah, so those deals, construction-wise, we finished a lot of these buildings in record times. Like we finished ground-up construction on a building. You'll see a piece of land, 6 or 7 months later, we'll be out of the ground and done, complete, ready to lease. The only part that took us much longer that we didn't anticipate is DOB and sign-offs. So sign-offs sometimes in some cases took 6 months. In addition to that, it took almost double the time of construction. In some cases, even 8 months. We had a project we finished in 7 months. 8 months later, we were waiting for TCO. I think DOB lost the sign-off. They signed it off, and then we were going back and forth with them for months, and they go, yeah, we unfortunately lost the inspection report when we signed off the building. So they spent 2 months trying to find it, and then realized they lost it. And then the chief inspector took it upon himself to walk the building and say, hey, we got to add these other 10 items.
Oh, my God.
And one of those 10 items were parking stackers. There were no parking stackers installed.
What's a parking stacker?
So before the City of Yes came out, you were required R6 zoning, above a certain amount of units, you were required to have parking. I think it was 11 or more.
It's 14 units, right?
This is 27 units.
Got it. But
So
14 units, I think, is the requirement. Once you have 14, you hit parking.
You hit parking.
Yeah.
Maybe it's 14.
Yep.
So basically, we got it signed off, and then they lost the sign off. The inspector comes back, says you're missing stackers. So right now we were at a crossroads. We're losing about $100,000 and something a month in rents. I mean, the buildings make roughly that a month, and City of Yes came out, so we could amend our plans to eliminate the parking requirement, which just came out, and that took like a few months, but we ended up getting it done. But yeah, I think the Bronx has done well for us. We have a management company which we manage our buildings as well as third party for other people. Over 100 buildings in the boroughs.
Wow.
And it's really management intensive.
The Bronx.
Very management intensive.
Even for these new builds and
even the new builds, we're doing some HPS. It's not so much in the maintenance. The maintenance is fine. It's a new building. It's more so in the renewals and the leases. A lot of these tenants are government subsidized. The government's paying us really big numbers, which I think it might be going away, or they lowered those numbers, but they're paying about, on average between $2,900 to $3,300 for a studio, or $3,200 for a studio, which is Park Slope.
It's crazy, yeah.
For sure.
For not a regular size studio, like a 300, 350 square foot studio, which is the micro units. I don't know if you guys have seen those.
Yeah, no, it's a brilliant business plan, right? Like I saw you, it's also interesting. A lot of these lots are like 19 and a half footers, 20 footers, 25 footers. It looked like some of them you really maximized the lot, like buildable. It looks like some you built back to like 100 feet maybe, or close to it.
Yes, the most.
And then jammed in. It looks like you jammed in a bunch of units.
Yeah, we jammed
to a
in
4-story building.
18 units, but we actually did not maximize our air rights.
How big are these units?
We had 300, 350 square feet in some cases. Some of the newer sites that we've done bigger units, but there were 300, 350.
I'll just tell Luke real quick. Like I have numbers on some of these. So they're buying. They have multiple deals. They bought like 890, 850, 820, 805 for like 2 families or 3 families, or like a auto repair shop or something with air rights, and they converted to 25 units, 16 units, 18 units, and then refinance. The refinances are for 6.4 million. 5.2 million, 5.4 million, another 6 million, 4 million.
It's crazy. So what are the tax implications here? Like when you go over 10, I know when you go over 10 units, obviously. So these are
35-year abated.
Yeah, got it.
35-year tax abatements, and believe it or not, by the way, at the debt numbers that we took, we have like a 135 or 140 debt service coverage ratio.
So were you taking 35-year? These are 421As.
These are 421As.
But these aren't all new builds. Some of these are alt COs.
Alt COs qualified for 421A.
You know that?
Yeah.
If you added more than 51% of new footage. And there's some debate about that because lately people are getting stuck with projects that they said if we change the joists, it's a 2-story building. If we change the joists on the 2 stories and then add another 2.5 stories, then we qualify. But the 421A finance basically is disputing that. There's some litigation going on about that. But if you have a building and you add more than 50% new footage, you automatically qualify for the old 421A. And I'm assuming it will apply to the new 485X as well if you elected to go through the 485X.
And so yeah, congrats on all those. How do you feel? What are your thoughts on this proposed budget from Trump for 2026, where he's talking about cutting like rent subsidies? Like, is that an issue? What are your thoughts on that?
So I think it's an issue federally. I don't think it's an issue on a New York City level as much. It's going to be an issue. If you can understand the program market is comprised of 4 or 5 different types of programs. You have a program called City FEPS, which basically houses homeless people. You have a program called Section 8. Section 8 everybody knows about. There's one that's federally funded and one that's funded by the city state. It's NYCHA versus HPD. You have another program called HASA. It's an AIDS program, basically helping people that have AIDS and subsidizing their rents. They have CVR, which is another branch of Section 8. So there's so many different subsidies out there. There's also non-for-profits who are looking for units to house their people in these units, and to basically provide housing for people that need, like Woman in Need is one of them. Like they house women that come from battered homes and problematic living conditions, and they move them, and they get covered obviously by private funding, sometimes by like philanthropists, as well as city funding as well, and they take units as well. So New York City, as long as New York City primarily remains Democrat, which looks like that's the direction we're headed for the foreseeable future, the city and the state will continue to fund the city-based programs. Maybe on the federal programs there'll be cuts. Probably will. But on the city-based programs, I don't see that. Maybe they might have to cut their budgets a little. I don't think it's going to go away altogether. I think there'll be some push.
Of course, it can't. It'd be way too much of an issue if all that rental assistance went away.
It's a big part of our business in this office, especially in the Bronx. I mean, the amount of those deals that we did this year, I mean, it's a lot.
A lot. And they're still happening.
So I think there's a little. Some of the people I'm speaking to, right? It's not a market that Derek and I focus on. There's teams that focus on it in the office, but some people I've heard they're a little nervous, right? Like they're not looking. They're trying to flip some of the contracts.
Right.
Obviously, like
We're not closed.
Or not closed. I mean, there's articles I saw that they're trying to do away with Section 8. I mean, like you said, I mean, maybe on a federal level, not so much on a city level, but I think that's coming up. And
Trump is saying he wants a 2-year cap on able-bodied persons, so meaning people can't go into the program like forever. And in New York, I think the average amount of time that someone's on Section 8 is 15 years.
Are you guys still looking to do those deals, or is that passed?
Yeah. I was talking to Jared actually about a couple deals that he has now.
Yeah.
So I guess going on the point where, where now people are thinking about rent reductions. Jared was telling us how the owner, the seller, his business plan right now is to fill it up with HPS. So underwrite with HPS numbers. Mm-hmm. I told him, I said, Jared, listen, nobody really knows what the future holds, especially when it comes to the rental amounts. Forget the HPS as a whole, just, rental amounts. So when we're going to look at something like this, we're going to be underwriting it more towards Section 8 numbers.
Yeah.
So, if we can't be if we're not going to be at a good enough cap rate on Section 8, then the deal won't work for us because we're not underwriting to HPS numbers.
So you're reducing the rents.
Correct.
Yeah.
Because we can't have a business plan with something that we're not 100% confident with.
Have you heard about this? There's all these new builds in the Bronx with I guess HPS rents.
Well, Jared has like 3 of them on the market. I know that.
Yeah, and everyone is underwriting these at like significantly lower rents. So the NOIs.
Oh, I'm sure
that these guys are showing.
It's never a higher rent. People underrate it. It's the lowest possible.
These NOIs are like getting really hit.
Yeah, for sure.
It could be a 12 cap or 11 cap on paper with HPS, but someone's underwriting it to Section 8. So you'd be like, new construction, 11 cap? Like, how is that possible?
So this is something Luke brought up when we were talking about like what we were going to ask you guys, but like you talk about caps. Like where are caps today? Because like, we've talked about like development and redevelopment so far. And
you guys especially are from our experience are mostly yield. The stuff that we're selling you, recently have sold you, they're yield deals, right? Like a lot of it it's mostly free market. There's room in the rents. You're getting a pretty attractive yield going in, but you're seeing these deals. So where are these deals actually, not just with us, but other brokers? Where are these happening?
So
the cap rates.
We underwrite about 150 deals a month, like fully underwritten.
Okay.
We tour a nice amount of them. We probably make offers on 75 to 80% of those deals. Unless we really feel like it's not something that we want to get involved in.
Or if we're just really too far off.
Or if we're way too far. Even if we are far off, we'll write an offer usually just because you never know when a deal might transact. You never know. We get calls a year later, 6 months later, we're still following up on a deal. So we always like to keep our pipeline full, very similar to brokerage. You want to keep your pipeline full and see what happens. But I'm seeing people transact, and where we transact, some people in the market are buying, 6.5 caps, 6.5 caps, in a good, let's say, Park Slope market, but I don't see really much of the 5s, 5.5s.
And when you say this, are you referring to buildings that are primarily free market?
So primarily free market with some mix of stabilization. Obviously, there's so many different asset types and so many different cap rate levels and what people are willing to buy. If it's retail, if it's office, if it's industrial, if it's mixed use, if it's if it's just multi, if it's fully stabilized, if it's program,
3-family,
if it's a
4-family,
if it's a 3-family, if it's a protected tax class building, a non-protected tax class
it's a loaded
building.
it's a loaded question.
So
for sure.
It's very loaded, but obviously there's a difference between something that's 75 to 80% free market and then something that's like fully RS.
Like, where do you think cap rates should be right now, though?
So I think right now we're seeing term sheets. Same with the underwriting. We probably speak to 15, 20 banks regularly. We're seeing rates between 6.25%, on the low end 6%, but 6.25% to 6.5%. So I think if besides for someone that's looking to buy cash and park money, I think cap rates should probably be somewhere in the mid 6s to high 7s. On a regular deal. If you're in the Bronx or if you're in East New York or if you're in markets that are Brownsville, I would like to see deals in the 8s, 8+. If you're rent stabilized, I think the cap rate should be double digits. I mean, in this market, I think you should be buying something that may not be a 10 cap going in, because if someone's selling, there's obviously an issue. They probably have deferred maintenance. They probably have non-paying tenants. So when I say cap rate, I mean after you factored in all the tenants paying and after you got this building up and running, you got to be at like a 9.5, 10 cap.
Why? Why so high?
In like these in a Class C market.
Class C, yeah.
I think, first of all, Class C, but also part of the reason is because of the work that needs to go into the property. It has to be worth our while in order, to get it fully up and running. You gotta be going in at a nice enough.
And there's no upside.
And there's no exit strategy or there's no play really besides cash flow.
So we had a deal recently that it kind of fell through, but there was a similar situation. It was in Brownsville, and we were going in at about a 9.5 cap. The broker tells us, I just spoke to the seller, no arrears. Mm-hmm. Okay, great. I don't buy it, but okay, great, no problem.
Yeah.
Let's send the contract. Like, let's get it going. So okay, great. Sends the contract. We're negotiating. We say, okay, represent that there are no arrears. He says, okay, no problem. Like, okay, interesting. Then I get a call a couple days later. He says, oh, speak to the management company. I said, okay. Management company sends me an arrears report. Guess how much there is in delinquency?
You were telling me the story, but
There's about $200,000 in delinquency.
what was the income on the building, or how big was the building?
16
It was 16
units.
units
Okay.
Where was this?
in Brownsville.
Okay.
So now we had to factor in the loss of rent from the non-paying tenants. Mm-hmm. Factor in legal fees, right, to start cases against them because we can't just have them sit there. And after all that, we had a different number. We said we can't be paying whatever it is because now our basis just went up. So now going in, we were closer to like a 7.25, 7.5. Mm-hmm. So we ended up telling them, we're like, listen, we got to be at this number. If they're ready to transact, we're ready to transact. But
and if you're listening to this, we're ready to transact.
Yes,
exactly. And by ready to transact, I mean you'll buy. I feel like you guys will buy anything.
And this is a 16-unit RS building in Brownsville.
So it's fully free market.
Oh, fully free market.
Yes, it was built.
Oh, that's nice.
Yeah, it was built in 2005.
Got
so
it.
Not subject.
So is the only asset class that you're not really buying is just fully RS? Because I can think I'm rattling off
No,
deals.
they're buying RS.
But you are buying fully RS.
We are, yeah. We have some deals that we're buying that are RS. I mean, lately we haven't really, transacted on much. Like we've done a couple auctions with Corbin and his guys.
You want to hear a couple of RS deals they've done?
Give me one.
Well, they bought a building in Prospect Park South, a 9-unit.
What deal?
Beverly Road, which I assume is RS.
Okay.
They've bought like frame buildings in the Bronx that I think are RS. There was one on Bronx Boulevard.
Okay.
An interesting RS deal is the 4 buildings they bought on 4th Avenue in Gowanus with 120 something
that was
feet
an
of
air right
frontage.
play, right? I saw that.
So that deal was actually very interesting.
Yeah.
We were. This was.
Let's talk about that deal. 'Cause I saw it, boom, 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 and I was like, oh my god.
they just picked off a bunch of those ZT Oak Tree properties, which I assume.
Let's talk about Fourth Avenue
Yeah.
real quick. If you guys want to share, I don't think of the exact address, but
Yeah, sure.
it's interesting.
So we had come across a building on 4th Avenue that was for sale. One of the buildings delivered vacant minus the retail. This is between 485X and 421A, the old 421A 16. We saw an opportunity. We were looking at it as a sub-rehab. It's mostly vacant.
Okay.
We were willing to do the sub-rehab. We still are. We're still doing sub-rehabs now, even in this.
Yeah, we saw you about that one recently. In Williamsburg.
Yeah.
Yeah.
And basically, we purchased that property from one seller, and then the property next door was another seller, and then the two properties next door was another seller. So the second property we went into contract as well, and then the third property we were about to sign with the seller, and another developer went into contract on that property. So the broker on the transaction actually said, listen, he would flip it to you. So he knew that I was in contract on the two. And I was looking at this deal from multiple lenses. So when we look at deals, we don't just look at it from, okay, here's the bricks, this is what you can do with it. We were looking at the fact that the buildings have air rights, and a corner is probably the most valuable lot type in New York City because you can build full lot coverage, and these lots are like 86 or 90 feet. So they're not full hundreds. So we negotiated. He flipped the last two to us, and we ended up buying all three. Fast forward like 3 to 6 months later, we knew something will happen eventually with a tax abatement. I mean, we don't predict the future. I thought maybe 1-2 years down the road, they'll come up with something. We'll do some sub-rehabs. We're buying the air rights at really, really low basis, close to $100 a square foot on the air rights. So we're like, okay, we can't go wrong. Down the road, one day we'll build, and it'll be worth a lot more money.
You're saying as a covered land play, it's $100 per buildable square foot total?
It's a little bit above $100 a square foot total between
phenomenal.
All the air rights, where Gowanus today is probably, I don't know, 300, 250, 300. Probably.
But you have rent stabilized buildings.
You do, yes. Yeah. We had to execute a business plan simultaneously. So, and we said worst case scenario, we do a sub rehab, and we're finishing these buildings at like 9.5, 10 caps. Like that was our exit. So we can execute a business plan. We're not going to sit on them for.
But
years.
you're going to waste the air rights, right? Because if you do sub rehabs, you're obviously dumping money in.
We're going to waste about $900,000 a building to $1 million sub rehabbing. So it'll bring our basis on the air rights from $100 a square foot to like $150 a square foot after we renovate. But later on down the road, if we wanted to develop, it's still affordable to develop at that price point. So ended up being 4 months later, 485X comes out, and then we're like, okay, like we didn't start the sub rehab. We got our plans approved. We're ready to start doing the work.
How many buildings is this for the sub rehab? Is for all of them?
We were gonna do a sub rehab on three of the buildings. One of the buildings were completely vacant besides for the retail. The building next door to that was completely vacant. The building next door to that was 50% occupied, and the building next door to that was also 50% occupied. So our goal was to basically move tenants from the second to last building into the last building, or get some buyouts. And
Got it.
We have 3 buildings that we could potentially do a sub rehab on, and at our basis, it made a lot of sense.
Yeah. And so is that what's happening? You're going for the sub rehab on those, or did your plans change?
Yeah, so we filed plans to build 99 units, about 100 and something thousand square feet. 17-story building. We're in the midst of getting them approved. It's also in Gowanus.
You have the buildings vacant now?
We have the buildings vacant, most of
clear
besides
path.
for retail. Clear path. So I guess the game plan is to build. We're also in the brownfield zone. I don't know if you're familiar with brownfield.
No, I'm not.
So brownfield is, Gowanus is known to have environmental contamination. There were a lot of laundromats, car washes, and the canal. So the brownfield program is where the city incentivizes you to clean up your property. and they incentivize you to do so by giving you a percentage of your construction costs back. Usually it comes out to about 20% of your costs get reimbursed by the city. So if you're building a site for, let's say, $20 million, the city would give you back, $4 million on credits.
What do you have to do to clean it up?
You got to take the soil. There's different types of soil. Obviously, they test the soil and they take them to different sites to burn them and clean up the soil and then bring it back on site. Additionally, you got to do an SSDS system, it's called, which basically it's like venting underground that blows any contaminants all the way up to the top of the building and out into the roof. So this way, all the contamination doesn't stay on site after you did this as well. And in some cases, people also put in vapor barriers, which is like basically a sheet that wraps the foundation to prevent any dangerous chemicals or whatever else contaminants from going into the building.
So you guys are building this building. Then that's the plan.
Yep.
That's the plan. We're moving.
How many square feet did you say?
It's 108,000, 109,000 square feet.
How many units is that going to be? 99?
Let's talk about that. 99 units.
Yeah.
All right. It sounds like some nice units, though.
Yeah. So the question is, why 99, right?
Yeah, sure. Why 99?
So basically, we had the density to build 150 or so apartments based on our square footage. Unfortunately or fortunately, the city's new tax abatement, the 485X, disincentivizes developers to build more than 99 units. And we're seeing this pop up across any development site that's going under 485X. They're taking sites that potentially could be a 400 unit. They're chopping them up into 99 units.
Yep. We see that deal, yeah.
They're trying to avoid basically prevailing wages. And a lot of advocates are saying, oh, you guys are skirting the system. But I think really the way the system was set up is it's unaffordable to basically build
More than
99 units. You got to pay prevailing wages, and with tariffs and construction costs being so high, it would make the project not make sense at all. It would be uneconomical to build a project with all these costs, rising costs. So we had to downsize to 99, go bigger on the units, get nicer units.
It sounds like it might be a good move, though.
Everyone wants the bigger units. These small
Especially
units
in
are
that
tough.
location.
Yeah, families.
Yeah.
A lot of families in that area.
Good.
Do you agree or you don't agree with the bigger units?
I agree that bigger units are better for longevity, meaning you have people that stay longer, so you have less turnover. But you're going to get, when usually we build a building, we like to have some sort of unit mix, so you get some sort of diversity. You get some units that are studios and one beds, which usually command a much higher dollar per square foot. So that brings up your average of your total development and your cap rate. But again, we got it at a good enough basis, where it made sense to do what to build 99 units, and it's a site that that I think that area is really developing. I think we're going to see a lot of growth. There's tens of thousands of units going up. I mean, not tens of thousands, but there's so many buildings going up along 4th Avenue. I think that'll create
And Gowanus in general.
more of a neighborhood.
It's going to cost you $20 million to build it?
No,
More or less?
more. It's
More.
100,000
Yeah.
square feet. So
All right, because you threw out the $20 million before.
as an example.
So what's the price on that? Out of curiosity, or close?
Price to build.
Yeah.
Usually we're pricing out between. I mean, there's hard costs and there's soft costs. Right?
Yeah, just do
if
the
we're not-
hard.
If we're not counting, environmental costs,
Yeah.
plans, interest rates. Usually we're looking at between $250, $265 a square foot.
For ground up.
Hard to build. And that's you'd have to run a pretty tight ship. I mean, we finished.
Yeah,
sites,
that's lower than I thought you were gonna say, but it sounds like you know what you're doing, obviously. So
Yeah, we finished.
Definitely does.
We finished the site at like $215 a foot. It's all things considering. You have to really be on
$215 a foot for rentals.
For rentals
in the Bronx.
In the Bronx,
Yeah.
which is on the lower end.
Yeah.
But some sites we finished at $290 a square foot. It was just, it's all factors considering. Like it's if you had we did an alt one, we thought we'd save money on the alt one, but really it cost more than $290 a square foot to build because not all sites are treated equally. So we have to value engineer and see, okay, if you're trying to maintain these walls while you're building on top, all the shoring, all the steel ends up bringing up your cost and timeline, and it raises your cost. But on an alt one case, it still made sense to do that because we're not having to comply with the new code using an alt one. Alt one allows you to maintain a lot of the old code, so you have a lot more building on a smaller plot. So you would never even demolish that building and build something new.
And you brought up sub-rehab a few times. So you're still doing sub-rehabs. What are your thoughts on that? Like, what parameters are you looking at, right? Like, it sounds like you're buying occupied buildings and vacating them. Is that something you're still doing?
No, it's not really buying to vacate.
Yeah.
That's something that we're not really undertaking unless we have a clear path
Yep.
prior to execution.
Yep.
We're working on a deal now. We're working on something prior to execution. We would
Yes.
have an idea, and if we can get to that point, then we would. I think it's going to be really tricky. I think we're definitely taking a risk. I'm not saying that, from what I hear, the DHCR is pretty strict when it comes to sub-rehabs, and it's not like they're using a barometer and saying, okay, this qualifies. There's no fixed way of knowing. It's someone sitting behind a desk is reviewing your paperwork and says, I think you did a good job, great, stamped, or more likely than not, they're trying to push and prove that you didn't do a good job to maintain, regulated housing stock.
Yeah.
But we do whatever we have to do. We cross our T's, we dot our I's. We're looking at, we're making sure that we cover our basis, engineers, architects, photos, affidavits, checks, invoices, receipts.
So with the new laws, like let's say you start construction after 24, right? Or 20? Is it 23 or 24? It's after
It's
24.
January 24.
24, right? So in your
Finished
in your opinion, what is substandard condition?
So substandard condition is undefined.
Correct.
In the memo that DHCR put out. But in my opinion, substandard condition is something that is pretty much uninhabitable. And the proof is the windows need replacement. If you can show, okay, the windows need replacement. The plumbing pipes are corroded. Electric is fuse versus breaker or not potentially, up to code. Floors are sagging downwards. Roof has a leak in it. Boiler is older boiler. Facade issues. Those are typical substandard conditions. So
Yeah.
sometimes it's we find it. We bring in an engineer, we bring in an architect, we bring in all these vendors to basically attest and take photos and document.
Yep.
And make a report showing that this in fact is in substandard condition and in need of replacement. Now, we'll find out hopefully for the better.
Yeah.
Within a year or so.
It's hard for them to argue that.
It
right?
is.
I mean, it's true.
But again, it's hard.
Yeah.
But sometimes there's no logic.
Yeah.
I've heard that they're trying to argue the fact that if someone's lived in the building, even if you bought it vacant, right? And there was DHCRs showing that someone lived in the building a year ago, they might say, "Hey, well, somebody was living in this building, 3 months ago. How if it's so substandard, why are people living there?" And obviously that is completely BS because we all know in these good locations they'll live in anything.
Yeah.
I mean, it's some of those things that we've seen. So it's not just because someone lives there for a cheap price does not mean that it's habitable or in good condition. So I've heard that, although, I mean, there's ways to prove around that, right? Especially with engineers proving that things are faulty or not good and floor sloping, because tenants have no idea what they're really living in, right? They can see it, but they don't know what's going on with the joists or the beams or any of that stuff.
Exactly.
So it's important proof.
That's the risk.
Yeah.
that they can come up with a reason not to, to deny you, not on the basis that you completed a sub-rehab. They could say someone lived there. Buyouts, I think, are a big issue. So if you did buyouts while doing a sub-rehab in the city and you submitted that to the city during your application process, they might deny you because they're going to say you paid this guy $100,000 to leave.
Yep.
It must have been a good apartment. If you paid him $100,000, they're not.
But they're assuming.
They're assuming. They make the assumptions the other way, and it's understandable. I mean, the New York City law is really based on who elects the politicians, and the politicians do what they dangle all these carrots, and right now majority of New York City or New York are tenants. So if I was a politician and I wanted to get elected, and I said, hey guys, I'm gonna take you guys out, free dinner, free lunch, don't pay rent if you want to pay rent, challenge if you want to, we'll pay for your legal fees. I'm gonna push all these things because that's gonna help me get elected and win. So the people that are elected and passing these laws and making these decisions are doing what pretty much the majority of the constituents want at the detriment of a long-term crisis.
For sure. So the other thing that I've really appreciated and enjoyed about working with you guys is these guys sign contracts for 30-day TOEs.
It's good.
Have you heard about that?
Yeah, I did hear it. And it's
these guys close. It's no bullshit.
It's
they
crazy
just come
that
to
more
the table
people.
and close.
It's crazy that more people don't do that. I mean, obviously you have to have the cash, right, or the relationships with some lender, right? But it would take everyone's asking for these long closings, on or about closings, and you could get it. Most sellers will do it for a better price if it's quick. So it's good.
Has that worked out well for you guys? These 30-day TOEs?
Take what we're doing right now.
Yeah.
Worked out.
All right, it did.
Working out.
And the previous.
The previous one also.
Is this something? I mean, so this is what you've done with us, like, right? Like, I know I can come to you guys for, like, a quick, no bullshit closing, but is this what you're doing on other deals across the market as well?
No, only with you, dude.
Yeah.
No, only IPRG. Only IPRG deals.
All right, amazing.
None of those Alpha or Marcus deals. Definitely not. Those,
give them 90 days.
We're giving them 90.
No, yeah, 90 on or about. 90 on or about. Not
Exactly. For sure.
But no, we're pushing it on majority of our deals.
Very nice.
It's good.
And how are you guys set up to be able to close so quick?
Banking relationships. So we have relationships with many different lenders. We've executed on deals with these lenders through COVID. We've paid our loans. We executed in a timely manner. So lenders are worried about risk. Like, that's their biggest issue. That's why it takes so long to close. So if we're ready, we're prepared, we know what the bank is going to ask, we can close a lot quicker. Sometimes people need 60, 90 days, because they're not prepared and they don't have the information, or they can't anticipate what will be required of them to provide. So we try to have everything lined up, ready to go, and we want to execute our plans right away. We don't want to sit on something in our head 60, 90 days away if we can. If it's something that requires 60 to 90 days, obviously
that's fine.
We'll need to. But if it comes down to, we'll get a better deal because we're going to close in 30 days, I'd rather do that and execute our business plan right away than push back and say I'll take 60, 90, 120. But again, we're doing deals, many different scenarios.
For sure, it's good stuff. Are there any other deal stories that you guys have done that are worth talking about? Like, for example, and we can talk about whatever. I mean, Court Street could be interesting, or Atlantic.
It's a little old though, right? At this point, you're talking about the bookstore.
They didn't do the bookstore.
Not
They
the
did
bookstore.
the funeral.
Funeral. Okay.
Yeah.
It's about 2 years.
I know
the
two corners.
Huh?
Yeah, exactly, off the corner.
Got it. I know exactly what you're talking about.
And then like
The whole block is turned too.
Like Atlantic Avenue out in like East New York. As far as I could tell, you guys own that thing for free. you bought it, you sold the cell site, you refinanced. So I don't know. I'm just throwing it out there. Are there any other deal stories that could be interesting and just talking about?
I mean, Court Street was an interesting one. We bought it when the interest rates were 3%, going up to 6 at the time, 6.5. Rates were just climbing.
Yeah.
We went into contract. Rates were really low. Our plan was to, bring it up to like a 7+ cap, which in the Court Street market at the time was a good deal. We basically rates hit 6% while we were about to close. So the banks, the bridge lender that we're working with said, listen, all right, we can't underwrite to an exit because rates might go up above what you won't have an exit. You'll have to come up with money on the refi. We want to make sure we're good and we're protected. So we ended up getting a better price on the deal from the seller with a lot of reluctance. We ended up closing on the deal, and our plan was to convert the second floor of the building from retail or office to resi. And we were going to convert, so this building's on Court and Sackett, so the back space on Sackett Street, we were going to convert it into a duplex and make it a resi unit and then keep like small retail. Mm-hmm. After 6 or 7 months, we found out that DOB approved the plans pretty much 9th inning. Chief plan examiner comes in, scraps the whole plan. He goes, unfortunately, we're not going to allow it. You need to put an elevator in the building. And we have two 22 footers or 21 footers. We're not putting an elevator on a 21 footer. I mean, you're going to butcher the whole entire building for ADA compliance.
Yeah.
So because we are vertically integrated, we have a retail leasing, we have apartment rentals. We were listing the retail simultaneous to see if we can get the right number. So we ended up going with retail, and we ended up getting really nice numbers on the retail and ended up being a really good cap rate above 9. I think we refied about $9 million on the deal. We paid $8 million. Probably invested $500-600 into the deal. So it ended up being really good deal.
Wow.
It worked out. We thank God that it worked out, but we had to navigate through different options. We had to convert it and split up the retail into smaller pieces. We got one on the corner, one on the inline. We got a second floor tenant on taking a 2,000 square foot space, which really good tenant, really good tenants in general in that area is what we found on the retail side.
Absolutely.
Yeah, it's a great pocket. It's a really good pocket. That whole block just turned over too. Yeah, no, it's good.
Yeah, that whole block turned over.
Yeah. Were you on those deals? Yeah.
Yeah, we were on the deals.
Nice.
Yeah.
It's gonna be a good block.
Yeah, I think Court Street in general.
Yeah.
I mean, again, we're doing a townhouse. The townhouse I was telling you about,
Douglas.
right around the corner from there. We're seeing a lot of transactions happen between 8 million and 13, 14
For
million
sure.
in that
That's
pocket.
crazy. It's a lot of money.
And you're doing a full this is a one family, or you're doing breaking up with condos? How's it going?
So if there's any buyers listening to this podcast, we're doing a 6,500 square foot townhouse with an elevator, 5 stories. It'll be, first floor walk-in, second, third, fourth, fifth, and the fifth is like a bulkhead with like floor-to-ceiling windows. It's gonna be gorgeous.
This is a conversion or it's a new build?
It's an existing 4-family that we are converting into a single family.
Nice. That sounds great.
Yeah.
We sell a lot of these. I mean, we haven't done a deal with you guys yet like this, but 15, 20. I mean, most of the blocks over there we sold. Maybe more, but a lot of 25 footers, and it goes to one of 3 people usually, and I think they're doing really well. They're very obviously location sensitive, but Carroll Gardens,
the
Cobble
numbers
Hill
aren't as good, like in actuality, as what it looks like on paper.
Yeah, but that's what everyone tells brokers.
That's what they say.
Yeah, that's what everyone tells. They don't want you to know they're making money.
Yeah.
Because then you tell other people that, hey, this guy's making money doing this.
But to Derek's point,
But you know how many people can't finish a product? Like, there's a lot of people that try to do this, especially like the users, like the people that come in and like try to like make a townhouse.
We're selling
and
a deal
they get
right
stuck
now.
in DOB purgatory.
We're selling a deal right now where someone, I mean, we see it a lot, but even Derek and I, we own buildings and we do construction. We kind of know what we're doing, we kind of mostly not. And we always run into issues. People that have no idea what they're doing and they're doing construction in New York City, I mean, it's so hard.
There's a lot of
Alt ones.
There's a lot of professionals that own a lot of buildings that still get stuck.
Well, because a lot of these people are we talked about a construction background, you have a GC license. I think that's 80% of the battle right there. But a lot of these people they're good at raising money. They have their relationships with equity, but they don't have the construction. And no matter how much money you raise and how many deals you've done, timing's everything. You get very lucky on your exits. If you don't know construction, it's a big problem. And a lot of people don't know construction.
We were talking about this yesterday or the other day in the office. One of my least favorite types of deals that we get across our desks are people that are trying to sell finished product.
Yep.
They're like saying it's a finished product, but it's not finished because it's not signed off.
Well, that's a huge problem.
Or they don't have the sub-rehab cert. And they're like, yeah, we did a sub-rehab. It's free market. Well,
that's very common because it's very hard to get a sub. It's time consuming.
But still,
it
like,
takes 2 years.
At least show us
a year or two to get
what you got, so we can make our own determination instead of being like, oh yeah, trust us. It's a good file. It's a good file. Like, yeah, then we run around and we market the deal. And
what Derek is really alluding to here is where we get hired on deals that are finished, where people are reluctant to tell us that they have open Alt 2s, open Alt 1. Obviously,
it's not even that. They'll send us a deal, like a rent roll, and they'll be like, "Oh yeah, price it for us," and we're like, "Hey, well, like, what's up with this open permit?"
Yeah,
and
we all know, like,
and then
they change the laws.
Then you see them hire someone else,
yeah,
and that person has it on the market, and I'm like, "Okay, have fun."
The challenge is for sign-offs, right? Even the Court Street deals, right? I finished construction in like 2 months.
Yeah,
we gutted the whole place. We built it out for our tenants, turnkey. We're able to execute. We move quickly. Great. I just finally got final sign-offs to get C of O on that property. I had TCO all this time. To get C of O, it took me a year later. Now, you're gonna ask, how is it taking you an extra year to get a C of O? So the challenge was, in order to get a C of O, you got to close out all old jobs, old permits. So we had filings, renovation work that was done by the prior seller, like 2011, 2010. So good luck finding that electrician to go sign off his project. Long gone. Call him. They tell you, see you later. I don't know who you are. Not interested.
Yep.
So now you got to find a new electrician who's willing to supersede that application, sign off what's behind the walls without seeing it, or maybe open up the walls and see what's behind, and then sign it off in order for you to get the full C of O. So sometimes there are other obstacles that people go through, or sometimes it's a PAA. What's a PAA? If you built a building and then you made changes during construction, like general conditions happen. There was a pipe sticking out of the wall, so now I had to move the wall over 2 feet. If DOB rejects your PAA and says this is no good, and you already finished the product and you already rented it out, in order for you to get sign off, you need to move that wall over 2 feet. But if you're already occupied, it's very hard to get sign off. So there's so many different moving parts and moving components in order to sign off a project, and you just have to be able to navigate, the system and understand what they're looking for and have the right professionals on hand that understand this stuff and prepare you in advance. Before you do anything.
100%, and even it's as small as like electrical applications. Like obviously, we sold a lot of deals to Carlisle, right? It was, I think, 65 deals at this point. And early on, when we were doing this, they were, and they still are, very anal about making sure everything's signed off. And we had a deal that we're trying to sell with an open electrical application, and it shouldn't have been that hard. Like the main Alt 2, all that was signed off, but obviously it was signed off 3 years prior, and the laws changed with electric, I guess. And
changes,
so someone came in and they're like, oh, this isn't code, that's not code, this isn't code. So the guy had to go and redo all this different electric work. It was so hard. They had to get access to occupied units. So I just think people really underestimate just signing off permits because there are people living there. You do have to open things up, and they're constantly changing code. So it's not like the code 3 years ago is the code today.
Correct.
So they would just sign it off, but it's not the code anymore. And that was the issue.
It is the issue. I mean,
Right?
that's why I urge everyone that does a project, sign it off right away.
Yeah.
Don't wait. Although it's, you can get away with it, you can not sign off the job, but if you ever wanted to sell the property or do anything, if you signed it off fully, you don't have to think about it. You put it to bed. The guy did the work. You paid him for the work. You paid him to sign off. It's just
Sometimes these guys aren't paying them either, though.
sometimes not paying them too, right? Yeah, that's true.
But we have some closing. We still have to pay the contractor. It's like, oh, he's not paid. What do you mean?
Yeah, it's just
crazy.
a challenge of, again, it's a challenge. I mean, you got to remember, some of these people build sites, with the rates being 3-4%. So when they were factoring, all right, we're going to build this into 7s and we're going to cash out, and then all of a sudden like rates go to 6. So now they're struggling. They need to come up with all this additional capital, which they may or may not have, and they're just waiting for the rents to come in. They're just playing catch up. So they're waiting for rents to come in so they can pay the old contractors and then put some money out to pay the bank. And in some cases, that's happening for people that are undercapitalized for a specific project.
It's a lot.
No, well, I think this has been a pretty good discussion. I think we went around the horn on a lot of stuff. I don't know if there's anything else you guys would like to go over.
Jacob, I think we
covered a lot.
Yeah, we covered a lot.
I
think it was a really impressive conversation. I think,
Across the
man,
spectrum.
you guys just have it. I feel like you really have a good knowledge and a good skill set about like all different types of asset classes and all the nuances. I mean, the way you're able to so fluidly speak about like just all the different parts, and it's a testament to the wide range of deals that you guys are doing, and the fact that you have like this knowledge and skill set that you can just come in and close and get it done.
I don't know another buyer that would buy that spectrum.
It is
build,
awesome.
Build a 99 unit, do a sub-rehab, buy free market.
Townhouse.
I mean, I didn't even know you guys were
rent stabilized.
I didn't even know you guys were doing this. I mean, the single family townhouse I think is one of the harder ones, right?
Yeah, the single family is, you saying the hardest ones to do? I wouldn't say that.
No, because of the attention to detail.
Fun, though.
It sounds fun.
It's not fun. I mean, I love it.
Fun.
For me, this is all fun. I love real estate. I love creating value. I love building a new product. I enjoy this. So for me, it's all fun.
Yeah.
I love it.
You have to have fun.
Yeah. We have fun in the office all day.
Yeah.
As do we. we have a lot of fun.
You can't take life so seriously. You got to enjoy a little. You got to
Definitely.
You can't just take things. You're working most of your life, so you might as well do what you enjoy and enjoy doing it while you're doing it.
Do deals and have fun.
Exactly.
Love it.
Things happen. You win deals. You lose some deals. It's all good. It's all part of the nature of the business, the nature of the game, and you just play right through it.
100%.
Move on to the next.
Love it.
That's what we do. I think that's a good place to leave it right there.
Yep.
So